Greetings, everyone. I'm David Darst. On behalf of Petiole Asset Management and the Family Office, welcome to what is beginning to be the first week of May 2025. Now, last week we had the first quarter, the first estimate of the first quarter GDP growth, and it came in at minus 0.3%. That was expected because of the big increase in imports, where many businesses were trying to get ahead of the expected tariffs that would be increasing their costs. We then had the core personal consumption expenditures inflation index. Now, that came in at 0.0% for March. So no inflation in March for that very important indicator. And year over year, 2.6% versus 3% back in February. The ISM manufacturing index came in at 48.7, so that's still in contraction mode, and that compares to 49 in the month of March. So April, 48.7, 49 in March, so it's still below 50. Then we had the jobs report on Friday. 177,000 jobs were created. And the two prior months were revised downward by 58,000 jobs. So it was not as strong as it looks on the surface. Unemployment remained at 4.2%. That's unchanged versus the previous month. And average hourly earnings were up 0.2%, and they're up 3.8% year over year. The big mover, I think, for the stock market last week, the big, most important influence were signs that are beginning to come out of the White House that the administration is willing to consider lowering tariffs and perhaps even to making a trade deal with China. So as you might imagine, this led to a return of bullish spirits. You also had very good technology earnings from Meta and Microsoft. They both exceeded estimates, very robust earnings, and also the outlook. Both of them said they plan on continuing to invest heavily in building out their artificial intelligence offerings. So as a result of all of that, the S&P 500 closed at 5686.67. It's been up 9 days in a row. That's the longest in 21 years that the S&P's been up that many times in a row. Over those 9 days, it was up 10.2%, of which 2.9% was this past week. So that means they've essentially recovered all of the loss after the April 2nd Liberation Day announcements of those tariffs that really caused the market to sell off heavily the next day, Thursday and Friday, April 3rd and April 4th. So far this year, the S&P 500 is down 3.3%. I'm sorry I've lost my voice a little bit here because I've been yelling and screaming playing games with my grandchildren. They've recovered all of that from the April 2nd sell-off. Now, it is the S&P 500 is 7.6% below the record, as you know, that was set earlier this year, February 19th, the record of 61.52. So we're 7.6 below that all-time record. NASDAQ up 3.4%, down 6.9% for the year, and the artificial intelligence spending plans of both Meta and Microsoft were viewed very positively throughout the technology sector. Meta was up 9% last week, 9%. It's up 2% year to date, and Microsoft was up 11%, and it is up 3.3% for the year. So both of those are in positive territory. The Russell 2000 up 3%. And it's down 9.4% for the year. The KBW Bank Index up 4.3%, and it's down 4.3% for the year. Europe, Europe was up 3.1%, and it's up 5.7% for the year. But I would remind everyone that the euro is up another 9.2%. So if you're thinking, if the dollar accounting, that would be up almost 14% for Europe this year. Japan is down 7.7% for the year, but the yen is up 8.5% against the dollar. Similarly, the 2-year Treasury, 3.83%, and it was up 9 basis points for the week, and it's down 65 basis points for the year to date, reflecting expectations of the Fed cutting interest rates. We don't think they will cut in the May meeting, which is coming up very soon next week. We don't think they will cut, but we do believe it's June, but it's possible with these strong employment numbers and the strong the strong recovery from the tariff hopes. The Fed might even delay their first cut from June to the late July meeting. The 10-year 4.33, it was up 4 basis points for the week. It's down 41 basis points a year to date. So it is reflecting expectations of the economy slowing, which is consistent with our thinking here at the family office and Petiole Asset Management. Gold down 1.5% for the week. It's still up 22.9% for the year, $33,231 per ounce. Oil down 8.9% on basic supply from OPEC Plus, as well as expectations of reduced demand. So down 8.9% for the week. It's down 18% for the year to date. This coming week, we will get on Monday the April ISM services. We want to see that one be comfortably above 50. We don't want it to be right at 50 or below 50, which would be contraction. We are expecting 50.3. That's the consensus, but we don't want it to be that weak. There'll be a lot more corporate earnings reports, and very importantly, corporate earnings guidance. We want to hear how these managements are talking about the current situation. It's very difficult to plan with all of this volatility relating to trade and tariffs. Wednesday, of course, we will get the decision of the Federal Open Market Committee on interest rates and their commentary. That will be equally looked at. We don't expect them to cut interest rates, but the commentary by Chair Powell will be very carefully scrutinized and analyzed. There'll be 11 Federal Reserve officials speaking this week at various points in time. As we look forward in terms of asset allocation and portfolio positioning, liquid equities, the theme there is diversification and balance. Some growth, some value, and some defensives. In liquid debt, you want to also spread it along the maturity spectrum. You have some intermediate and some long and some short to protect yourself in terms of interest rates, whichever way they go. Private equity, there you want to focus on the secondaries. A lot of holders of private equity are selling some of their positions, and sometimes these can be picked up at a very reasonable price at a discount to net asset value. Private credit, there you want to be looking at the collateralized loan obligations, debt, collateralized loan obligations, equity, and then private real estate. There you want to be focused on managers who can supply you with participations in logistics, data centers, and pay very close attention to the covenants and the credit protection. With that, we appreciate your being with us today, and we look forward to speaking with you very soon, inshallah, and have a great month of May.